Hey there, everyone. Welcome back to another episode of your favorite English podcast. It's Emma here, and I'm so excited to be joined by my co-host, Mike.
Hey, we're so glad you're here with us today. Today's episode is all about something, super practical, financial English. You know, money, banking, investments, all that stuff that can feel a bit overwhelming sometimes.
Yeah, absolutely. So, have you ever found yourself wondering, what does ROI even mean? Or, why is everyone talking about compound interest? If that's ever left you scratching your head, we've got you covered.
Exactly. Financial terms might seem like a foreign language at first, but oh man, they're the key to making smarter money moves. By the end of this episode, you'll feel way more confident navigating these conversations.
Totally. So we're going to break it all down for you. Money, investments, and banking, one step at a time. And hey, if you're new here, don't forget to hit that subscribe button so you don't miss out on more, great tips coming your way.
Before we dive into the details, let's start with a few guiding words to help us navigate today's topic and make it all super clear.
Guiding words. All right, let's kick things off with some guiding words to set the stage for today's topic. These terms are going to pop up a lot, so understanding them will make everything much easier.
First up, we have finance.
Finance. This is basically the management of money. Things like investing, borrowing, saving, and budgeting. You know, all the stuff that helps you achieve stability or even grow your wealth.
Setting a budget to save for a vacation is a great example of finance in action.
Exactly. And once you've saved enough, you might think about investing to grow that money.
Next is money, which we all deal with every day.
Money. It's a medium of exchange, cash, coins, or even digital currency like PayPal or cryptocurrency.
Oh, totally. Like paying for coffee with cash or your card.
Right. And with digital wallets, spending money is more seamless than ever.
Finally, there's banking, all about managing transactions like deposits, withdrawals, or loans. Emma, any quick example?
Sure. Depositing your paycheck into your bank account is a simple one.
Exactly.
And even checking your account balance is part of modern banking. So with these guiding words in mind, you'll feel much more confident as we dive deeper into financial terms and examples. Ready to see how they all play out in real-life situations?
Let's do it. Up next, we've got a dialogue to bring these terms to life.
Hi, I'm looking to save up for a house, but I'm not sure where to start. What would you recommend as the best saving strategy?
Great question. First off, you'll want to get familiar with interest rates. If you're saving for a big purchase, like a home, you'll need to know how your savings can grow over time. For example, if you put money in a savings account or an investment, the interest rate determines how much you'll earn.
Okay, that makes sense. So, how do I know if I'm doing it right?
Well, you need to understand your return on investment (ROI). Basically, ROI shows you how much you've earned from your investments compared to what you put in. So, let's say you invest $1,000 and after a year, it's worth $1,200. Your ROI would be 20%.
Oh, I see. That sounds pretty good. But what about, the risks? I've heard that some investments can be risky.
Yes, that's true. The key to balancing risk is understanding compound interest. When you earn interest on your original investment, and the interest it's already made, your money grows much faster. Over time, it can really add up.
Got it. So, should I be investing right now, or should I just save for now?
Well, it depends on your timeline. If you're looking to buy a house in a few years, you might want to put money in both savings and low-risk investments. You'll want your assets, like savings and investments, to grow, but you also need to manage liabilities, like debt, to keep your financial situation in check.
Yeah, I definitely don't want too much debt. So, what should I do next?
A good next step is to set up a monthly deposit into a high-yield savings account or investment account. Make sure to withdraw only when necessary and keep track of your account balance regularly.
That sounds manageable. And when I'm ready to buy, should I just go for a mortgage?
Yes, once you have enough saved, a mortgage is a great way to help finance the home. Just remember, Understanding the interest rates and loan terms will help you make sure it's a good fit for your finances.
Thanks so much for the advice. I feel more confident about how to approach this.
You're welcome. Stay focused, keep saving, and don't hesitate to check in as you move forward.
Key phrases.
All right, let's dive into some of the key phrases we just heard in the story. First up, we've got savings.
Sure. Savings is simply the money you set aside for future use, whether it's for an emergency fund or a big purchase like a house or a car. It's all about putting money away so you're, financially prepared when you need it.
Got it. Next, let's talk about interest rate. What's that, Emma?
The interest rate is the percentage that a bank or an investment will pay you for keeping your money there. For example, if you put $1,000 in a savings account with a 3% interest rate, you'll earn $30 in a year. It's, how your money grows over time.
Makes sense. Now, let's move on to investment. What exactly is that?
An investment is, money you put into something, like stocks, bonds, or real estate, with the goal of making a profit. But of course, there's some risk involved, so it's, important to do your research before jumping in.
Right. And what about assets? What are those?
So, assets are things you own that, have value, like your house, car, or savings. They're, things that can help you build wealth over time, especially if they increase in value.
And on the flip side, we have liabilities. What's that all about?
Liabilities are things you owe, like, loans or debts. For example, your mortgage or a credit card balance. The key is to make sure your assets outweigh your liabilities to keep your financial situation, healthy.
Got it. Next up, we've got deposit. Can you break that down for us?
Sure. A deposit is, when you put money into an account, like when you get paid and, deposit that money into your bank account. It's the opposite of a withdrawal, which is, when you take money out.
Right. And your account balance, what does that mean?
Your account balance is simply, the total amount of money you have in your account at any given time. It's important to, monitor this regularly to make sure you're, staying on top of your finances.
Finally, we can't forget about mortgage. Emma, what's that?
A mortgage is a loan specifically for buying property. You borrow money from a bank or financial institution, and you pay it back over time, usually with interest. It's a huge commitment, so it's important to make sure you can manage it before taking one on.
Great explanations, Emma. So, with these terms under your belt, you'll be much more prepared for any financial conversations.
Tips to manage finances.
Now that we've covered some of the key terms, let's talk about some practical tips to help you manage your finances effectively.
The first tip is create a monthly budget. This is a simple way to track your income and expenses. By doing this, you can see where your money is going and make sure you're saving enough for your goals.
Yeah, exactly. The next tip is set realistic financial goals. Whether it's saving for an emergency fund or paying off debt, having clear goals will help you stay focused and motivated.
For sure. And another important tip is to understand the difference between needs and wants. This is key for prioritizing your spending. For example, you need food, but you might want a new phone. Knowing the difference helps you control your budget.
Exactly. And make sure to regularly review your financial statements, whether it's your bank statements or investment reports. This way, you can track your progress and adjust your plans as necessary.
And finally, consider consulting a financial advisor. They can give you expert guidance when it comes to managing your investments, savings, and overall financial plan.
So, by following these tips, you'll be well on your way to financial success.
Tip of the day.
All right, listeners, our tip of the day is stay updated by reading financial news in English. It's a great way to build your familiarity with industry-specific vocabulary and stay on top of trends in money management, investments, and banking.
Exactly. And the more you read, the easier it'll be to talk about finances in English with confidence. It's a simple way to level up your financial vocabulary.
So make it a habit to read or listen to some financial news every day and watch your knowledge grow.
Audio recap. Key phrases in action. Finance. The management of money, including activities like investing, borrowing, saving, and budgeting, aimed at achieving financial stability or growth. Example: she works in finance, managing investments for a large company. Understanding finance is crucial to managing your personal budget. Money, a medium of exchange used to purchase goods and services, typically in the form of cash, coins, or digital currency. Example: he borrowed some money to pay for his car repairs. You can send money through a bank transfer or mobile app. Banking, the industry or activities involved in managing financial transactions, such as deposits, withdrawals, loans, and account services provided by financial institutions like banks or credit unions. Example: he went to the bank to set up a new savings account. I need to talk to banking services about a loan for my business. Interest rate, the percentage charged on a loan or paid on savings or investments, typically expressed as an annual percentage. Example: the interest rate on my savings account is 3%. They offer me a loan with a lower interest rate than expected. Investment, the action or process of allocating money into assets, stocks, bonds, real estate, or other ventures with the expectation of generating a return over time. Example: he made an investment in stocks and saw his portfolio grow. Investments in real estate can provide long-term financial benefits. Return on investment, ROI, a measure used to evaluate the efficiency or profitability of an investment, calculated by comparing the gain or loss to the original investment cost. Example: the ROI on my new business venture was higher than expected. You should always calculate the ROI before making an investment. Compound interest, the interest on both the original amount of money invested or borrowed and the interest that has already been added. This leads to exponential growth over time. Example: with compound interest, your savings grow faster than with simple interest. The benefit of compound interest is that it works for you over time. Assets, resources owned by an individual or entity that are expected to provide future financial benefits, such as property, stocks, or savings. Example: real estate is one of the most valuable assets you can own. His assets include a mix of stocks and bonds. Liabilities, financial obligations or debts that an individual or business is required to pay, such as loans or outstanding bills. Example: the company's liabilities are higher than its assets. It's important to manage your liabilities to maintain a good credit score. Deposit, money placed into an account, often in a bank, savings institution, or investment account. Example: I made a deposit into my savings account today. The deposit required for the apartment was $1,000. Withdraw, to take money out of an account, such as from a savings account, checking account, or ATM. Example: I need to withdraw some cash from the ATM. You can withdraw funds from your account anytime during banking hours. Account balance, the total amount of money available in an account at any given time. Example: check your account balance regularly to track your spending. The account balance shows how much money is available for withdrawal. Mortgage, a loan specifically used for purchasing real estate, where the property itself acts as collateral. Example: they took out a mortgage to buy their first home. I'm paying off a 30-year mortgage for my house.
All right, so let's wrap things up. Today we covered some essential financial terms like savings, interest rate, investment, and mortgage. These terms will help you feel more comfortable talking about money, banking, and investments.
Exactly. We also shared some practical tips like creating a monthly budget, setting financial goals, and understanding the difference between needs and wants. By following these tips, you'll be on your way to mastering your finances.
And don't forget our tip of the day. Stay updated by reading financial news in English to build your vocabulary and stay ahead in the world of finance.
We hope this episode has helped you feel more confident in your financial English. So, why not give it a try? Engage in a financial conversation in English today.
And if you found this episode helpful, don't forget to like this video and share it with that one person who needs it. Comment and subscribe to our podcast. We've got more great episodes coming your way.
Thanks for listening, everyone. Make sure to leave a review in the comments. We would love to hear your thoughts. Most importantly, don't forget to subscribe to stay updated. Until next time, keep practicing, and we'll see you in the next episode.